Blog Talk Radio.
Are you ready to take a bite out of the competition? Are you looking for ideas to make your business better? Welcome to the Core Business Show with Tim Jacquet, sponsored by Apple Capital Group. At the core of every successful business, you'll find people making a difference. And with each episode of the Core Business Show, we talk with those people, examine those ideas, and explore the strategies that make them special. Now, the host of the Core Business Show, Tim Jacquet.
Welcome to another edition of the Core Business Show. I'm Tim Jacquet, your host. Our topic today is DBA versus a corporation. And one of the debates of a small business owner is what to actually charter myself as. Should I be under assumed name, or should I be a corporation, or should I be a partnership? And you're kind of bombarded with all these particular options that you can be. The simplest thing is being a DBA, which is an assumed name certificate, is the cheapest, but also everything ties to your name. So you're the person liable on the line for something to go bad with business. Only thing is you're just giving a certificate to authorize yourself to operate under a different name. You can operate as any name pretty much if it's available for that county or the district or for that state. It usually only costs me $10 a year, $15 a year to be a DBA. Even corporation is a little bit more taxing. You have to actually do a charter with your state to be a corporation. Then you have to look at the taxes and all the other options there. Partnerships, think of that as a marriage and so forth. So what we're going to do is going to listen to a presentation real quick regarding assumed name certificates. Should I be a DBA or should I be a corporation?
Mortgages should be illegal because you're getting robbed every month. With a typical $200,000 30-year mortgage, you'll end up paying over $400,000 after interest. Hi, I'm John Commuta, creator of the Transforming Debt into Wealth system. My proven system can eliminate your mortgage and all your debts. Let me send you a powerful free CD. For your free CD, call 1-800-933-2911. 1-800-933-2911. 1-800-933-2911.
Blog Talk Radio.
Hello again, my name is Tim Jacquet, Senior Vice President of Apple Capital Group here in Jacksonville, Florida. Today I'm going to talk about the difference between a DBA, doing business as, the sole proprietorship, and a corporation. So it depends on really what are you going to accomplish long term. But I always tell people if they're going to start a business, one thing they want to do, once that idea comes in their mind and they know what company name they want, just go ahead for the grin of it for $10. Just go to your local county and register that name as an assumed name that you're doing business as. And that, again, that was timestamp when you actually start the business. So without question, you know exactly when you start the business and you can begin to get credit if this comes up over time. By definition, a DBA, which is assumed name and certificate, or a sole proprietorship, is when an individual themselves is only one owner, decides that he wants to take all liability, he wants to be in charge of the business by himself, no other person in charge of it, and it's just him. There's no partners, no nothing. It's just him. He wants or she wants to start her own business. By definition, I would say a sole proprietorship is a business structure with one owner who assumes all the risk and liabilities associated with their businesses, but who also capture any and all profits earned by the business. Sole proprietorship generally operates under assumed name, ABC Company, or whatever you want to call it, but they operate under an assumed name certificate. So you're the owner, this is how you're going to operate. If I'm Joe the Plumber, Joe Plumbing would be the assumed name certificate. And you're saying to the world, I am Joe the Plumber, who's operating as Joe Plumbing Company, if that makes sense to you. Okay? A real simple process. The person will file their assumed name certificate in their local jurisdiction, county, or city. But I would also make sure you go to the county and the city to make sure you're covered. Just check with your local county or your local city to make sure you're covered, that you're allowed to be in business and operate with that. A corporation is more if you're going to have more than one owner. I'm not going to talk about really partnerships in a sense. If you're a firm, you know a lot about partnerships. But be a sole proprietorship is only costing maybe $10 or $15, and they usually good for 5 or 10 years. Cases 25 years in the past. Also, sometimes in certain jurisdiction, a business license will suffice and give you the same coverage as you doing business as Joe the plumber in this particular city or this particular county. But the downside of that, you're going to assume all the liabilities and all bills. So keep in mind that if you get a credit under your business name, you're going to assume all the risk and responsibility. They're going to come after you. Even if you Joe the plumber and they look in the county records and Joe the plumber shows that he's the owner as a sole proprietorship, they're going to come straight to you to collect their debt. And now you owe it. And they can put that on your credit report. Say, hey, Joe the plumber owed me $100 or $600 refused to pay for it. You're liable for that. That is the biggest thing when it comes to sole proprietorship. But I would say this, when that idea comes to your mind and you know how you want to brand yourself, I say timestamp that name for branding reasons. The corporation is a different entity in itself. Think of it as another person. You're another person and you're working for that other person or that entity. As a corporation, you're a legal entity. You can buy things, you can trade things, you have your own tax ID number, you're an entity to itself. And if an owner comes in, it's really considered an employee or shareholder. So you help operate this company because this company can't do anything by itself. But legally can engage in a lot of business on its own, can build more credibility as a corporation because now we have a formal entity that can do things. Now, basically, it's a little bit more expensive to do a corporation. It is a legal structure recognized by tax agencies as a legal entity. Its debts are its own. It doesn't pass to the shareholders or any particular employee. You can have on a regular C corporation, regular corporation, you have unlimited shareholders, and you can do everything as a Fortune 500 company do. You might have the capital to do it, but you can do it. But if we look at the definition alone for a corporation in itself, it assumes all risk itself. And it is a legal entity of itself. It has its own shareholders who are owners of the company. It has to have a board of directors and a list of officers. So those three things are components of the legal structure of that business. Shareholders who owns the company, board of directors who actually make decisions of the company, and officers that actually work as president, vice president, secretary, or treasurer for that company. And those individuals help operate the company itself. I would say always think long term what you're trying to accomplish. If you want to be a plumber and you want to branch out, it's easy to do that if you move into a corporation and sell shares of your stock and go forth and raise capital that way. As long as you have some good profit margins, you have a lot of flexibility, a lot of things you can do that you can't do as a sole proprietorship. So kind of keep that in mind as well. As a sole proprietorship, it doesn't give you that flexibility as a corporation. Also, some people will talk about, I heard about there's an S corporation. And an S corporation is mainly as a tax recognition that this corporation is taking itself, but is always going to have a small shareholders, less than 75 of them, and that's all they're going to have. But we don't want to be taxed twice. We want to be taxed once. Not at a corporate level, since you're a separate entity. We want to, whatever that company earns, we want to pass that to our own personal taxes. So the tax liability and burden will just shift from the company to the individual. So it'd be one tax rate versus two. And that's the only difference. And if you're sole proprietorship tax-wise, it's a little different because you actually can take that off your Schedule C. Deduct all the expenses on your Schedule C. And you're not double taxed. Your tax is one entity because in essence, you're assuming your name as Joe the Plumber and you're Joe the Plumber. You own Joe the Plumber, you're just using a separate name to do business with. Corporation, totally different. If you don't file for your election in time, then what happens? Then you just be a regular corporation and you have to file your tax return and you be taxed twice in whatever the company actually earned throughout the year. So at the end of the year, you got to pay your corporate taxes and you pay your personal taxes if you receive any dividends from the company. Partnerships are a little bit different. Partnerships also would keep that with if you're a law firm, they're well versed in that. If you just really want a partnership, again, the liability shifts is not as strong as a corporation. Liability will shift to you. One person told me in college, professor, he said, partnerships are like marriages. You spend a lot of time with this person, and if something dissolves or go haywire at the end, it can be an ugly marriage and an ugly partnership, and you can't get rid of either one of these without dissolving the entire relationship legally, which will cause some issues. But versus the shares, you always can sell your shares to another person or vice versa, let him buy you out or whatever. But the going to a partnership, you just need to make sure that you know who you're dealing with. You look at marriage. You're all a tie together, and when you operate your business, just be very prudent on how you actually operate things because it affects both. If you go sign for a contract and you can't fulfill it, that liability goes not only to you that made the mistake, it goes to that person. In the corporation, that's not the case. There is only the corporation that liable. Is not as a partnership. Both parties are liable in that case. Another thing regarding the assumed name certificate, again, you go to your county, fill out the form, and assume that name, and it's really easy. Then go to the IRS website, get your tax ID number, and then go to your local bank and open a commercial account, a small business account for your DBA. Likewise, if you are a corporation, you do your articles of corporation for that state, and take those along with your tax ID number to your bank and open your bank account. Those items are timed, and always think that you want to apply credit in the future. In order to apply for credit, they're going to look at how long you've been in business, how long you've been doing things. And we'll talk about this in some other shows that we're going to be having over the course of the month. But think about this long term. If you start this cycle, do it now. Do it now. Stamp it. You can always change your name. That's fine. But if you know that you want to be in business, get that DBA and let it get time stamped the date that you started. Get your employer identification number. That's time stamped. Get your bank account open, and that's time stamped. And it's easy for, just think about it in the year that you decide to get a bank loan or equipment loan or whatever, and the bank calls. It's a lot easier, even if you ain't had that much money in the bank, but it's a lot easier to say that you had this account for a whole year than I just opened it yesterday or opened it a month ago. It really dates you. It really dates you to the point that, hey, you're really, really, really start out and you have nothing thought out that's going to make you legitimate to say, yeah, I'm serious about this business. So just keep that in mind. A couple of things when it comes to corporations. If I did a chart side by side, I guess we need to do it for this episode and post it on our website. If you do a corporation, a subchapter S, a limited liability company, a general partnership, and sole proprietorship, if we do those 5 columns, owners need not to be a U.S. citizen for a sole proprietorship. That's on this form that someone gave me. Owners can report profits and losses on their personal taxes. Okay, those 2 things a sole proprietorship will cover. And if we go to a limited liability company, it's a hybrid of a partnership and a corporation. And by definition, I would say a limited liability company is now considered one of the most popular forms of business organization for many new entrepreneurs today. Think of it as a hybrid with 2 structures, 2 components that gives you some of the flexibility as a limited partnership with the pass-through rates for tax structure, and give you another option of decreasing your subchapter S, shareholders for your company as well. So the structure is structured and governed in a manner that's very similar to a corporation. A limited liability company consists of the following: members who are shareholders in the corporation, managers who can be also on the board of directors of the corporation, officers who manage the company. It'd be a regular filing like you would do for a corporation, and you can go over the limit of 75 shareholders. Now, when I see an application that says LLC, I know it is a small company. I know that there are some people behind that company that can help guarantee a loan. I know that it's smaller operation because of tax reasons. They want to stay small. They want to do things on a smaller scale than expand. So kind of keep that in mind. You want to always talk to your accountant. You also want to talk to an attorney and really look at that option very closely. LLC costs just as much as a regular corporation. But if you're going to stay on a small scale, I would say, yeah, go for an LLC. But talk to your attorney about which one is going to be the best option. If you sell products and services that you can expand, I would say go to a corporation. And like, for example, I had one client who was applying for a loan and really wanted to go public, but he had, you didn't know, his company made $2 million a year, and they really can afford to expand, and they did a loan in order to make themselves more credible when they filed a security exchange filings. Hey, we have a loan for $250,000 from Apple Capital, or $500,000 from Apple Capital, $1 million, whatever. And that looks pretty good. Yeah, you have debt, but also that's your working capital loan, and that looks pretty good. I'm not sure you need to talk to a security attorney how that LLC would play out with the company that's going public. If I'm a corporation, I want the option to go public. If I'm selling products, I want the option to grow in the future. One thing I need to care about is just keep selling, and I will get there. But you really need to see what's going to fit for you. If you want to start small, and I tell people always to start small, get your clientele, get your sales, get you a platform that you can grow slowly and build your sales. Even if you're doing 500 a month, increase to 1,000 a month, you're doing on the side, 5,000, 10,000. Get yourself a solid clientele that's always going to be with you and grow from there. And if it becomes to a point you start hiring employees, I might want to start thinking not being a sole proprietorship, because I'm liable for everything they do. If I get them my company car to run an errand to go get lunch from me, and they hit somebody, they're going to sue me. They're not going to sue that particular person. Yeah, they're going to sue that particular person. They're going to sue me along with that. And they're going to sue all the assets I have. So if I have a building that I own as a sole proprietorship, they're going to come after that building and get a lien on it. Some states are not really friendly. When the judgment is passed, they want to collect their money. And that would force me to go in bankruptcy, and then that affects credit and so forth. But I would say if a person started off, start off as sole proprietorship. But as you grow, and if you're going to take an employee under your roof full-time or part-time, then there's some other things that you're going to be liable for. You want a corporation, protect yourself. You want to separate the corporation from you. So you're not on the hook. Maybe they drive your company car, but you get a small insurance policy that protects you if you don't allow them to drive your car. Don't let them come after you. I would say that's a good example of having a corporation in your pocket versus a sole proprietorship. If I'm just a consultant, I'm running my tax agency, I am doing everything myself. I just have maybe a virtual assistant or a small assistant that comes to do paperwork for me, who's not going to be leaving my office, who's not going to discuss what happens in my office. Maybe, I can do that because it's just me in my office and that one particular person who's working for me. Not going to run errands, going to be right here in the office, and that's all I'm going to do. That person has to ever leave my office when I'm going to be liable for. I will move into a corporation to protect me, because if that person hits somebody or that person says something, disclose something my clients told me, and they hear about it, post it on Facebook or post it on Twitter or get mad or whatever, then I'm liable for that. I prefer to be liable as a corporation versus being liable for my personal assets and my family. That's what it boils down to. You need to protect yourself as an individual. You're protecting your family, protecting your house that you worked hard for, your car, your assets. Some people like to go earn and buy things and pay it off. Well, if you have a judgment, they come in after what you have free and clear. So always keep that in mind, that start off small, start with your sole proprietorship, get timestamp, get your credentials, get your clientele in place, and move on from that. And then when you start hiring employees, move to a corporation status. Their corporate filings are real simple with the state. You can do it online. It will save you a lot of money. You don't have to have an attorney. Sometimes it's $50, sometimes it's $100, sometimes it's $300. No, Texas is $300. However, Texas, you're paying a fee up front in advance for future filing. If you have no income, you don't pay anything. If you're looking at Florida, it might cost you $75 to file your articles of incorporation. However, every year you have to pay a fee. you pay on, and a tax return you have to file. So that's an additional $100 or $150. And if you don't file that by that time, they will fine you, and it'll cost double the cost. Texas is not like that. I can say that once you pay that, if you have no asset, meaning no income or negative income, then it really doesn't affect you. You just stay there. It's a franchise fee. But those are the main differences between the DBA. Those are the main differences between a corporation. If you're looking long term, go towards a corporation. If you're going to hire an employee, go to an corporation. Be incorporated so you can protect yourself and operate as a corporation. One thing also you want to also keep in mind when you pick these names for your businesses is right now the economy is e-commerce. If you're going to be Joe the Plumber, make sure you can look online that if you need a website in the future, that you won't have a hard time in finding a website that will meet that particular name. I know Joe the Plumber, if you type it into Google or something like that, that's already taken. But, if you go to, I'm just using GoDaddy, I'm not advertising them or whatever, you're not affiliated with them. I'm just using this particular as a person, as a company that I can just type in your name. And if I'm saying that if I am a baker and I think of these long names, well, everybody don't want to type long names. Think of something really quick and simple, what you can abbreviate. But that's a good point. I'm sorry I'm going in the circle, but if you're a sole proprietorship and you do that DBA when that idea comes in your mind, and think of also your website at the same time. Hey, if I'm going to get Joe the Plumber, why don't we call Joe P as website.com? Joe P, if that makes sense. Because nobody wants to type out JoeThePlumber.com. Like our company is AppleCapitalGroup.com. Because there are so many different Apple Capitals, we had to go that route to show that we're a little different. We're not the same Apple Capital because there was no Apple Capital Group. But putting that on the business card is real difficult. It's tiny print. And we just use now first initial and last name, AppleCapitalGroup.com. Hopefully they will buy a domain that will make this a lot simpler than actually AppleCapitalGroup.com. But if I did Joe the Plumber, like if I did JoeP.com, maybe Joe P might be available. Joe P is already taken, ironically. But just play with that in some of the domain website companies. And when you think of your company, think of maybe 3 names. Out of those 3 names, also associate that with a website. And that can help focus you to get where you need to be on your website. So just think about it as an option where you might want to be within your company's name. Hey, I want to be Joe the Plumber. I would say my website will be Joe P. My website will be blah, blah, blah. But keep that in mind because that's going to be real important in the future. Another thing, before we go, we have about 2 minutes left. If you do a corporation, think long-term where you want to be because you got to do things a little bit different. You got to get a corporate kit. You're going to have a first official meeting. And legally, you're supposed to keep those records pretty clean. Hey, I had this first meeting. We elected our first officers. And that information is always available for anybody to come in and look at. Even some bank, I remember one underwriter asked for a copy of their first minute to say, hey, this person is authorized to run this business because during their filings, what they looked at on the original articles of incorporation said these 5 people or 3 people started the company and this person's name wasn't on it. And he said, I actually started that company. Well, the underwriter said, well, why your name is not on here? And in essence, he came clean and said, actually, I bought it from somebody else. I really didn't start it, but I took over it slowly. So those things come down. And they asked him for his first minute. Can you give me a copy real quick of his first minute? He didn't even have the corporate kit. He had to go to his attorneys to try to make minutes, and the attorneys don't have time to make corporate minutes real quick for you. It takes them a couple of days. Underwriting not waiting for that because they think you're manufacturing information. They want it that same day or they want it the next day within, 24, 48 hours. A copy of it. Give me your first minutes if you started this company. They wanted to see if his name was on those minutes, and his name wasn't on that minutes. And then he said that he really hadn't. He actually bought the company later. So anyway, as a recap of the sole proprietorship, again, the business structure with one owner who assumes all risk and liabilities. and shares in the profits, and also can take the debts and liability on their own, and also can file their Schedule C, and that information will come on the return. It's a separate entity on itself. Because it's a separate entity to itself, it files its own tax return once a year. And within that tax return that it files, that if it's not a subtracted S corporation, that profit and cannot be transferred to that person's return, or losses cannot be transferred in that person's return. So anyway, that's information on the difference between a DBA and the difference between a corporation. And if you have any questions, I would say reach out to me anytime. You can look at our blog or reach us at Apple Capital by doing info at applecapitalgroup.com.
Thank you for listening to the Core Business Show with Tim Jacquet. For a free quote on equipment leasing and financing, visit our website, applecapitalgroup.com. That's applecapitalgroup.com. And fill out the information to receive your free quote. We hope you'll join us for our next episode. And remember, you can always get to the Core via iTunes. You'll find all our previous episodes there. Thanks again for listening to the Core Business Show with Tim Jacquet.